Alright, so in this video we're going to be covering the breaker setup. So the basic mechanics of a breaker setup is generally where we form a high, we'll trade down, and we trade above that high. It's also known as a stop hunt. So what we want to see is we want to see it run above that high, break down, pull back, and trade away. So it always starts again with a formation of buy stops and sell stops. Once those buy stops and sell stops are formed, we'll expect it to take out one level. At that point, we don't have a trade yet. All we have is some information. What's the information? Buy stops have been taken. It means we have to wait for the transfer to occur. Again, the money is transferring from retail into the smart money, and this is a pattern that they use to facilitate that movement. So once the buy stops are taken, that's great, but we need to see, is this going to take the sell stops and we're starting a transaction, or is it just going to pull back and keep running those buy stops? So once we run those sell stops, now we have a transaction. We have brought buy stops and we've brought them to the sell stops. So we identify, and listen carefully on this, we identify the leg that sold before the stop hunt. Now that leg is going to become our resistance. We don't want to see price return back up to these buy stops. A simple way to think about this would be just like a head and shoulders. We don't want to see it trade much further on that right shoulder. So when it reaches back up into this selling structure, that's when we can begin looking for our shorts. So again, we're just focusing on this part of the price action now. And so when we frame this leg, we're looking at three main points. We're looking at the low of this leg that shorted. We're looking at 50% of it, and then we're looking at the high. And we define the high as the sweet spot. We call that the sweet spot, right? Sweet spot being here, because that's going to offer us the smallest stop loss. Stop loss would be above this high. So when they trade back, if we enter here at the very low, we're going to have the largest stop loss. If we enter at the 50%, we're going to have about a medium stop loss. But if we enter here at the sweet spot, we're going to have the smallest stop loss. And again, it would build in kind of that head and shoulders move. So for a bullish breaker, everything's the same, but opposite. Again, we start just with a consolidation, identifying buy stops and identifying sell stops. Once one has been taken, they take the sell stops. We want to see the opposite side be taken to confirm a transaction. Right there, now the transaction is confirmed. We're looking at the leg that bought before the stop hunt leg. So that would be here. We focus on that. Again, we're looking at the high, the middle, and the sweet spot down here. So as we trade back into it, we can begin looking for our trades at those levels. We'll cover these a little bit more as we get into the course and going over confluence, but this is just a quick introduction to breakers. Breakers were probably one of the trickiest patterns just for me to conceptualize, but once I started understanding them, they started making a lot more sense. What I would do is I would just take a model like this, just that very first one, something like this, and screenshot that and place it as your screensaver. So that's what I had to do with breakers. I know for a lot of people, they're probably going to be really simple, but for me, especially when I first started trading, this pattern was really difficult for me. So again, watch this video one more time. Make sure you got it down, and I'll see you in the next one.